Welcome back. You are tuned in to Traders Nation. My pleasure to have with us here today book author Dr. Adrian Manz. He penned Around the Horn, a trader's guide to consistently scoring in the markets. Doctor, welcome to Traders Nation. How are you today?
Thank you. I'm very, very good. Thank you.
Good. Listen, do your trading techniques that you write about in Around the Horn offer consistency that enables it to capitalize on any market, whether it's bear, bull, what?
Yeah, it's the whole notion of Around the Horn, besides sort of being a baseball analogy, was that the market, as we all know, is cyclical.
Sure.
And the patterns in the book, they capitalize on the seasonality and the cyclicality of the equities markets.
Right. Now you also talk about, in fact, throughout the whole book, as far as charts having it set up, we talk about that on Traders Nation. Forever we pound the table on it. Now, is there one setup in your book that is easy for someone to understand, that offers because some traders are new to trading, right, in addition to the expert traders, and we'll get into another question in regards to that, but that has a high probability of a good trade? Is there one setup that really just stands out for you?
Well, yeah, and right now, especially the fastball setup that's in there, it's an expansion of range, expansion of volume, and it capitalizes on volatility.
Yeah.
So in the current environment, when those have been coming up, I mean, they're almost 100% profitable.
Right. All right. Now, what systems do you use as far as your charting is concerned? Do you use a particular system? Without getting into it, we're not endorsing anything here, folks, but is there a system that you use, a set of tools that you use on a daily basis that help you find these setups?
I'm basically a chartist. I mean, I use Realtek as my trading platform, and I just go through and flip through 1,400 to 1,900 charts, I would say, a night.
Yeah.
And just sort of hammer through them and just look for these patterns. And I've been looking at them for so long that I see them when they pop out. It takes me a couple seconds per chart.
Sure. All right. So your regiment, really, as it should be for everybody, is really you've got the market data. And that trades throughout, stocks that trade throughout the day, how they did, how they closed up, and you do your scans at night, right?
Right. Right after the close, I sit down, and then there's probably about 2 hours of just flipping through the charts, looking for the patterns, and then I do the setups. I do a very detailed trading plan every night.
Sure.
It includes an entry level, an initial profit target, and a stop loss. And the next day, I just go in and I trade those things very robotically, and not really a lot of decisions on the fly.
Yeah. Now, is there a way to maybe fine tune that process? I mean, 1,400 stocks that come up on your scan, there's got to be a way to fine-tune that maybe down to a couple hundred, right?
Yeah, the other way, if I'm pushed for time or something, I like to do it because I like to see sort of what's going on in the whole market. I like to see what the participants are. I like to see what's happening everywhere.
All right.
If I'm pushed for time, I'll go through, and rather than flipping all the charts of all the stocks initially, I'll just flip through the sectors.
Sure.
Find the sectors that look like they're set up, sort of like these patterns in the book, and then find the individual stocks in the sectors that go and replicate those patterns.
Yeah. Now, as we finish up this year in 2008, any particular sectors that are really kind of standing out for you that may close strong and maybe offer an opportunity in 2009?
Well, we've been short almost the entirety of 2008. I mean, even from the highs of 2007.
Yeah.
We came right into this thing short. I mean, going into 2009, I'm probably going to watch a lot of the commodity-related stocks for some upside. Whether it's Anglo Gold or Freeport-McMoran or those kinds of things. I see upside, but only on a very limited scale. A couple hours to a couple days.
Now it's been a great year for bears. I mean, we had Damon Vickers on yesterday. You may know Damon Vickers,
right?
And bears have really been chewing on the market, double-digit percentages for the whole year of 2008. All right.
Right.
All right. So, is it fair to say that maybe you're flat right now?
Well, we're flat going into today. Yeah, we didn't have. We really didn't have any setups for today. I'm primarily trading these things intraday.
Okay.
So I've had setups just about every day for the last couple months, and I mean we're just doing, we're going gangbusters. So.
All right. Now, what kind of trader will benefit from Around the Horn? Are we talking about day traders, swing traders, maybe even long-term investor?
Yeah, those charts. I mean, those patterns are pretty nuts and bolts. They'll work in any time frame. I trade them intraday.
Yeah,
that's kind of my role. That's my role in the fund. That's my role in my private trading. So that's what I focus on. But I've got one of my partners is a swing trader, and he trades the same same patterns, just on a wider time frame.
Sure. All right. Now let's talk about that on an intraday. Do you use a 1 minute chart, 2 minute chart, 3 minute chart when you're looking for these setups?
When I'm looking for the setups, well, I look for the setups on daily charts, and then intraday I trade them from 5 minute charts, and we use once we hit a profit target on them, we'll use a 25 tick chart to find ongoing support and resistance, just to refine the trailing stop.
Right. Okay, good enough. Now, the methodology that's broken down in Around the Horn, in simple terms, even for the beginner, and we talked about this earlier, it can be understood, but powerful enough for the experience to benefit. Would that be a fair statement?
I would definitely say so.
Yeah, all right. Now, how advanced to some of these setups and charting that you go into in Around the Horn? Is it complicated, or is it, again, broken down just in simple terms?
You know, the most complicated setup in there is an opening gap strategy that requires a 2 standard deviation calculation. And I mean, any piece of software has probably 10 different ways that you can plot 2 standard deviations on a chart.
Sure.
And that's the most sort of mathematical thing in there. The rest of it is just, good old-fashioned chart reading.
Yeah, all right. And you mentioned earlier too, as you troll through a lot of those stocks that are on your scan, it's quite easily, once you know what you're looking for, these chart patterns just really pop out at you, don't they?
Yeah. I would say at most I used to use a chart scanning software to run through these things, and quite frankly, I can find them just flipping through them just as fast as the software can.
Sure.
It doesn't take that long to learn to see these things.
All right. Now, at some point, you have to have what we call build-up. When do you start getting rid of all that old stuff that you've been looking at? When do you take it off your list, create a new list?
So what I'll use is volatility as a measure of whether or not I want something on my list. I'll use volatility, volume, and range.
Sure.
So basically, I'll use true range as a measure of volatility. The current day's trading range as sort of a final cut for whether something is going to be on my list or not. And then, as far as volume goes, I want to see something that trades between, say, 300,000 and 3 million shares per day as an intraday setup, because those are the ones that are really going to move once I get into them.
Yeah, where do you set your risk management at? Stop losses, trailing losses, things of that nature. Where are you at? 8%, 10%?
It's all based on risk reward. So I'm not doing it on a percent drawdown kind of a basis, because I don't hold anything over, and my risk reward ratio just has to be greater than, say, 1.25 to 1, and then I'm happy with the setup.
Okay, all right. And when you say you don't hold anything over, you're talking about anything overnight?
Right, especially in the current market. I mean, there's like a switch hitter pattern in the book where, if the market's trending real nice, I'll hold those switch hitter pullbacks. I'll keep those things for a couple of days if I have an extended target.
Yeah.
But in the current market, I mean, an extended target used to be a couple of days. Now it's 4 or 5 hours.
All right, let's go back. Let's go into Around the Horn a little, and some of the terminology that you use. In fact, what would you consider as your favorite setup that is in Around the Horn?
I would definitely say it's the fastball setup.
Fastball?
Right. That's a volatility based setup, and it's just been able to absolutely capitalize on a lot of the mayhem sort of in the market recently. Whether it's on the long side or the short side, that thing just really grabs a volatile setup and manages to get you in the next day and get you just for the portion of it that's reliable.
All right. Now, for the rest of the setups, of course, they can go out and get a copy of Around the Horn today. Now, where can they find it at?
They can find it at TraderInsight.com, or they can find it at Amazon or Barnes & Noble, just about anywhere.
All right,
TraderInsight.com has about the best pricing on it.
All right, TraderInsight.com. Head on over there today. Today we have Dr. Adrian Manz. He's with us. He book authored Around the Horn, of course. Head on out over to that website, and also Barnes & Noble, wherever your fine books are sold. You can get a copy of Around the Horn. Doctor, thanks for being with us today. Appreciate your time.
Thank you.
You're more than welcome. All right, Dr. Adrian Manz once again. We do appreciate his time and his expertise.